Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
These are tough times, and they're getting even tougher. The clock is ticking. The countdown to collapse is well underway. What are you going to do about it? Will you just wait for it to happen, or will you be ready when it happens? The decision is yours, and yours alone. Join myself, Mickey Fulp, Robert Ian, David Morgan, Jeff Berwick, Elijah Johnson, Alan Butler, Gregory Manarino, Daniel Amaduri, Andy Hoffman, Tekoa Da Silva, Trace Mayer, one of the world's leading Bitcoin authorities, Bix Weir, Jay Taylor, and Gary Christensen at the Liberty Mastermind Symposium in Las Vegas on February 21st and 22nd, and learn how to create your plan to survive the collapse. The last Liberty Mastermind Symposium was one of the most highly rated conferences ever, and this one promises to be even better. Don't miss it. Join us and register now at libertymastermind.us. libertymastermind.us. This one is going to be out of this world, and it's going to be even better because it's in Las Vegas, Nevada. Go to Liberty Mastermind US and sign up today. You are listening to the FinancialSurvivalNetwork.com. I'm Kerry Lutz on 1230 WBZT. Well, things are happening fast. Is the Federal Reserve going to buy the Bank of China, or is the Bank of China going to buy the whole world? Well, we don't know, but we do know that there's $24 trillion worth of debt created in China over the past decade, and the inflation Olympics are well underway. And here to talk about it, Woody O'Brien. Woody, welcome back.
Hey, great to be with you again, Kerry.
Okay, so things are heating up pretty quick here, aren't they?
Well, they sure are. The quantitative easing that's going on in lots of different countries, adding an awful lot of money out there to aggregate money supply. It's not necessarily showing up in the prices that people are paying yet, but of course, inflation is the increase in money supply, and the U.S. government, as Jim Rickards likes to say, must have inflation in order to lower the real cost of all of its future liabilities and its tail risk and out years. They're never going to be able to devalue the Social Security of people who are your age and my age without lessening the value of the dollar. That's requiring an awful lot of inflation. And unfortunately, at this point, the Federal Reserve is not smart enough to know if they want to really increase the inflation rate, they ought to stop quantitative easing to buy bonds and start quantitative easing to buy bullion and commodities.
Yeah, they've caught between a rock and a hard place. And, you know, there's an interesting story floating around that there's some investment that's coming due in China on the 31st. And if it defaults, it's going to trigger a massive default all through China, which is obviously they're not going to let it happen. And it's just a disinformation story to allow the Chinese to bail it out, to say, see, we really are in charge. Nothing can go wrong, go wrong, go wrong.
Well, how can people who can create money in the first place ever be in default? If you can create money, if you're a central bank or a country, or if you're a sovereign country, you can just turn on a printing press and print money to pay any obligation it is that you have. That's the difference when you see some of these cities like Detroit and Harrisburg, Pennsylvania. They can't get rid of their debts by printing money, but sovereign governments and central banks certainly can. So it's a farce to say that you're really going to have a governmental default. What you're really going to have is currency devaluation. And the best textbook case of that in our history is back in the 1920s, when the Germans couldn't possibly pay the war reparations that they owed to the Allies. They just printed the money and paid them off. Of course, that resulted in a massive hyperinflation. That's certainly the direction we're going to get to. It's just no idea how long it's going to take to get there.
Yeah, and that's the way the whole world has to go, or at least the West, because the obligations that you see in the U.S. are mirrored by Western Europe. I looked at a chart one time. Every country in Western Europe has the same retirement issues, the same obligations to retirees, both for Social Security or their equivalent, and and medical care to the retirees. As the United States, some countries have it far worse, but they all have it.
Yeah. Well, there's a problem with the way that people are doing the measurement when it comes to inflation. And the reason is because if you're going to measure something, you have to use a ruler that doesn't change. And the fact of the matter is the U.S. dollar, its value changes every single day. And I like to use the example of, back when I was a kid, I used to buy a gallon of gas for about 30 cents. But back then, it was a silver dime. Those silver dimes are worth $1.47 per today. So 3 silver dimes would be $4.41. You can obviously buy a gallon of gas for about 60 or 70 cents below that. So you can say, measured in silver, the price of gas has fallen over the past 40 or 50 years. So that's one of the real problems that's so confusing to people when you talk about inflation, because if you compare it to something that changes all the time, you really don't have a valid comparison. You have to compare something that doesn't change over time. And I always like to use the example, if you compare the price of a Hershey bar 50 years ago, how much chocolate cost per ounce then and now, not just in dollars, but also in silver or in gold, you're going to get a much better measurement of real price changes if you're using a real measurement versus something like the dollar, where the amount of dollars in circulation changes by the hour.
Yeah, and you were kind enough to point me out to a publication, Historic Prices in Morris County, New Jersey. Just so happens I grew up about 8 miles away from there, and it's fascinating to go look at these prices because, I looked at the year that I was born as opposed to now, and you really get a sense of where prices have gone. The problem is that very few products that we were buying in the late 1950s match exactly to the products that we buy today. But many of them do, though. If you look at things like chocolate or peanut butter or a pound of flour, you can make good comparisons. I like, my favorite one to look in this website is look at the prices for 1913, the year the Federal Reserve was born. Back then, a pound of peanut butter was 11 cents. Well, and that was an organic peanut butter. If you go into Whole Foods and you try and buy a pound of organic peanut butter today, you're going to pay $5. So it's very easy to say that, the price of peanut butter has gone up 50-fold, priced in dollars, probably not so much priced in gold or silver. Yeah, and if you look at houses for sale in Denville, New Jersey, 5-bedroom colonial, $675,000. And if you look at it back then in 1913, house for sale, Morris Plains, 7-room, where is it? Morristown. They don't have it right here. Doesn't have it exactly right. So point is, it's around, I take it back. I was reading it wrong. 9-room house, $2,500.
Yeah, you probably couldn't buy the dog house next to the that house today for $2,500.
Yeah, Morris Plains, $4,200. That's high rent district there.
And I think there's an important thing for people to remember about price changes. If you had an organic system of money where the amount of money that was in circulation was stable, because we're programmed at the factory as human beings to be able to do things over time better and cheaper and faster. We are literally hardwired to deliver things to market, deliver products to market at better quality and lower prices over time. So if we had an organic system of money, organic economics is by definition deflationary. The prices should be going down over time as people figure out how to produce more. But of course, we only think about how much purchasing power we've lost from the increase of prices. We don't even begin to consider how much purchasing power we've lost under the Federal Reserve System because prices should have gone down as production goes higher and the value of the money remains stable.
Because when you look at the prices from 1776, or I guess 1791, is that I always get the dates confused. Once the country became a republic, the Constitution was ratified. 1791 through 1913, there was zero movement in prices in the aggregate. Yes, prices did go up, and then they went down. They went up during wars, when we went off the gold standard, when banks printed paper to finance wars, primarily War of 1812 and the Civil War. But then prices always stabilized. They never went up. They went up an average of 0.12% per year over 120 years. It wasn't until 1913, the income tax and the advent of the Federal Reserve, when prices began their meteoric rise upward over the 1900s. That's when it all started. The fact is, like you said, prices actually would be going down because productivity always goes up over the long term, and especially with technology. The car that you're driving now, really, if there was a stable monetary unit, would be far less than it was in 1957.
Well, the cars are actually an interesting example, because if you go back to the first cars that Henry Ford built in 1910, those cars were about $800, which would be 40 20-ounce gold pieces, which today, that would be worth about $70,000. So you could actually buy several cars today for $70,000, where back 100 years ago, you pretty much could only buy just one. So that's an example of something where the cars are much, much better. They're much more sophisticated, but in real terms, measured in the real money of gold or silver, they're actually less expensive now than they were back then. And I think this is one of the principal problems of economics is that we get into this tunnel vision of thinking about everything being valued in dollars, with this fantasy that the dollars themselves do not change in value, when of course it is that they do. Where if you're appropriately analyzing things, you should be looking at things not just measured in gold, not just measured in silver. How about in firewood? How about in water? How about in a bushel of corn? All of these prices have interconnecting relationships that are based on supply and demand. And if you did have a sound money system, people forget, we had a very long period of time, as you've just stated, where a $20 bill and a $20 gold piece were the same thing. And if you're an impoverished poor person or a person of low income, inflation is your worst enemy, because it requires you to continually make more money, pay more taxes just to stay the same. If you had a money system that was stable and over time prices went down as productivity went up, that would be your best friend, because every income gain that you had would be a real gain, versus the system we have now, where almost every income gain is just barely trying to get you to keep up with the inflation of the value of the money.
Yeah, great point. And only helped debtors and banks, let's face it. So anyways, on that note, Woody, tell us where we find you on the web.
I'm still the only Woody O'Brien on Facebook. People can find me there. And of course, my life's work, abolishfiatslavery.com. I'm also an investment newsletter writer. That website is woodyknowsmarkets.com.
All right. And of course, link will be found in the show notes on financialsurvivalnetwork.com. We've got our Liberty Mastermind Symposium, libertymastermind.us, taking place February 21st, 22nd. Don't want to miss it. Woody, always a pleasure. We'll talk to you real soon. And hope you enjoy the Inflation Olympics, man. They are taking off, and they're going to far surpass any Sochi Games or Russian Olympics. Far more entertaining and far more important, for sure.
Hey, great to be with you again, Kerry.
Take care. Hi, it's Kerry Lutz. I recently decided to move my retirement account into physical precious metals to hedge against the coming times. If you want to move an existing retirement account into physical precious metals that you can hold in your hand, tax-free, there's no company that can do it more quickly and efficiently than Regal Assets. It took them just 24 hours to open my new IRA account, and all I had to do was fill out one simple form. The best part is that Regal Assets does all the work for you. They cover the setup and administrative costs for 2013. If you're interested in making the same move I did, call 855-678-6620, 855-678-6620. That's 855-678-6620, or visit them at regalassets.com. You'll be glad you did, and tell them Kerry sent you. Summer is almost over, and so far we've really lucked out. No hurricanes. And living in Florida here, I'm extremely grateful, but that could change tomorrow. And look, we're about to celebrate the 1-year anniversary of Superstorm Hurricane Sandy. Do you remember that one? Not very many people in the Mid-Atlantic or the New York area region were prepared for it. But if you had PrepareWise emergency preparedness food, you were ready. If you'd prepared with PrepareWise, water, and the basics, some currency, and a means of self-defense, you weren't caught off guard. And if you weren't prepared then, please learn from it and get prepared now with PrepareWise emergency preparedness food. It always pays to prepare. Go to preparewise.com, use the code Lutz. You'll get great savings. Depending on the size of your order, you're going to get a whole lot more. Be prepared. Don't be caught waiting for the government to come and save you. Preparewise.com. Use the code Lutz, L-U-T-Z. Be prepared.
The Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.